there, so for the final, is it more heavily weighted towards the post-second midterm stuff? No, so it's just everything.
It's whatever we think we want to make sure you test the report stuff. The more time you spend on it in class, the more likely you should see stuff. Is that fair? Okay. I mean, post-second midterm, we've only had one topic, so it'd be pretty easy if I said it was all that. Okay. Yeah.
I'm just wondering if there's two cheat sheets. Like I know in the midterm we were giving like the classes and.
Yeah. Same thing. Anything you'll need to do the questions like that. Present value tables, all that stuff. Okay. Okay. So don't use your cheat sheet for tax rates, tax tables, CCA rates. Okay. That's a waste of your space and time. Fair enough. Okay. Anybody have other questions? Okay, I think probably we're going to finish marking the second assignment later this week, so we'll probably get it on Tuesday. Okay? Probably some people marking our master's students and they're finishing the master's stuff, so we're just trying to figure out if there's a lot of stuff going on at the same time. Okay. Any other questions on midterm, assignment, or final? Anything else? I know some people, you've given me your participation stuff recently, and my apologies, I'm tied up with all the other stuff that's going on. That if you didn't do it within the first week, that was sort of when I did it. You're going to just get it at some point in time in the next few days when I get caught up. Okay, so it's just a matter of how much time I got to do all this other stuff. So, okay. All right, let's do this question here. So I'm hoping that a lot of people took a good effort at this question. Remember, I asked you to do it because there's a lot of stuff in this question you're going to need to know at some point in time, probably, either in this course or not. Okay, so. Determine the tax issues for 2010, include consideration of all activities, compute tentative Division B income under each alternative. So, ladies and gentlemen, there's two parts to the question, right? Right? So A and B. So when you're looking at that, you should say, okay, well, part A is determine tax issues, including all the considerations of activities for both alternatives. So what I would do, part A basically says, tell me tax issues. As stuff comes up, you're going to say, okay, that's an issue. What's the issue and how do I resolve it if there's something to resolve? And then as you're going along, that if there's stuff that you're calculating, it's probably going to affect part B. So what you do with part B in another page, and you can toggle between the two. Does that make sense? So what I'm going to do is, I'm going to put up instead of jumping around between, I'm going to leave the document thing here to go from as the question, and then we'll do the solution on there. Is that okay? So here's the required, and let me just move this so you can't see that anymore. There's required. So let's just move this. So that's there, that's there. Okay, so what we're going to do is, so section 1, that's us. And we're going to do, what is it, problem 8? 8A, okay? So issues, how do we say this? Issues for 2010. Or 11. Don't worry about the year. When you get to the final, the year will be right. Okay, it'll be 2011, and all the questions will deal with 2011. These are just questions taken from before. Okay. So, who wants to walk me through? So literally, now we know the question just says, tell us what issues are and what you're going to do about them. So it becomes a matter of starting at the top and identifying issues and then dealing with them as they come up. Okay? Janish, what do you got?
Yeah, I guess, I didn't get all of them, but it's to start with the top. Like the dividends, they're not taxable, right? They're to the owners, the 50,000 and 100,000.
Okay, so hang on. So we've got, the first part just talks about a bunch of blah, blah. Talks about basic information, which is good, just tells you blah, blah. Okay, so the first thing you're talking about is financial statements are there. So first thing you talk about is owner distributions. During the year, no changes in ownership occurred, which is good. The corporation paid dividends of 50,000 and 100,000 to Adam and Lee, respectively, on December 30th.
Yeah.
Okay, so what are you going to do with that?
So they're like dividends, right? So they're not taxable.
Huh?
Well, they wouldn't be taxable, right? The dividends to the owners, they're taxable.
No. Okay, remember, dividends are not taxable to owners that are their companies.
Yeah.
Right? These are individual shareholders. Therefore, individuals pay tax on dividends. Okay? Remember, the whole system, the Canadian system is the lowest company, the company earning the income pays tax. Every other company in between pays no tax. It flows through because of the in and outs, that we talked about, the section 112 deduction. The individual shareholders at the top, or non-resident shareholders, I mean, we won't deal with that in this course. So basically, individuals or non-residents have to pay tax at the top. Okay, that's the way the system works. Everything in between flows through tax-free. Okay, subject to what we'll talk about in 18 months, part 4 taxes, but don't worry about that. So issue number 1 is, actually number 1 should be, I gave it to you the other day, is tax rate. We should use. It's not, they don't talk about tax rates in this, so the first issue that you're going to come up with in this thing is what tax rate should we use. I gave it to you the other day. So we gave you the 33% given. What else did I give you the other day that I gave you the other day that you needed to do, to use for calculation? Okay, the other one would be discount rate. So you scan through the question, it doesn't tell you those two things. And anytime you're doing questions like this, so there's tax rate we should use, and then discount rate we should use. And we said 10% given. And that's 10% after tax. Remember? Okay? Before tax doesn't help you. After tax is what you need. Okay? So item number 3, I think, in terms of your issue summary, is dividends received by shareholders. Okay? So, company gets no deduction for dividends paid. Right? Everybody agree? Company does not get a deduction for dividends paid. Contrast that to interest. Company gets a deduction for interest paid. So when companies look at what kind of payment they're going to make to shareholders, you have to look at the fact that it's non-deductible to the company. Right? Right? Individual shareholders have to include dividends received in income in the year received. Okay? So the Canadian system for individuals is based on a cash basis. Right? It's in a year you receive it. Everybody agree? So let's say if a company declares a dividend on December 30th and you receive the dividend in January, when do you have to include it in your income? So a company declares a dividend on December 30th, but you receive it in January. You receive it, you include income in December or January? January. When you receive it, just like pay. I work till December 31st, I work New Year's Eve, and I earn $10,000. I'm an entertainer. But I get paid on January 1st. You include in your income on January 1st, so the following year. So it's all based on a pay basis, okay? So what you're going to say is individual shareholders have to include dividends received in income in the year received. And don't forget, little sub-point to that, what else do you say?
You get a deduction.
You get tax credit, right? They get the dividend tax credit. Because dividends received from a taxable Canadian company, the shareholder will be entitled to a dividend gross up and dividend tax credit. Everybody remember that from your 201? You gross up the dividend as an individual, and then you get a dividend tax credit. Okay? Everybody remember that? So that'll tell you, you know what you're talking about. If this is a company receiving the dividend, you'd say tax-free because you get included income, but you deduct under section 12. It's an individual, included income, you have to do a gross up, and you do a dividend tax credit. Right? So again, as you kind of get through this stuff, ladies and gentlemen, over the next 18 months, 2 years, what you're thinking needs to show up on the paper or you don't get the marks. You may know this stuff, but if you don't say it, you lose marks. It's the way it works. So when you look at your UP marking keys, guess what? A lot of the stuff you say, oh, I knew that, I knew that, I knew that. Well, write it down, right? It never hurts to write it down. Number 4. Okay, who wants to help me on the next item? So fixed asset transactions. Anybody want to start the next one? Who wants to do the fixed asset stuff? Who wants to do the fixed asset stuff? Who wants to do the fixed asset stuff? Somebody? Anybody? Anybody? Okay, so let's read through what we got here. To make a home for store in 2007. Where are we here? Sorry. The Randy decided business could use a house. He owned the house located blah 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 blah. House was acquired in 1999 for $400,000. The land at the time. So the first thing they're telling us here is what? What does that tell us? The house was acquired in 1999 for $400,000. The land was valued at $250,000. The building was at $150,000. What does that tell you?
So tell me how much you purchased it for?
So those are your cost bases, right? Okay, everybody look. Everybody see that? So that sentence that says the house was acquired in 1990 for $400,000. The land was valued at $250,000. The building is at $150,000. Okay. So what they're telling you there is those are your cost bases. Do you need something?
Oh, we didn't get the sheet. Okay, just
Okay. So basically that tells you you're not going to write it in your solution, but you're going to put a little note to yourself, right? Okay. I would remember you can mark up the question paper all you want. Make a little note to yourself. That is the cost basis for those assets. Remember, but this is only to the individual. Okay, so don't do it again. You're just kind of telling yourself what's going on. But otherwise, it's just a bunch of numbers and gobbledygook. Okay. By 2007, fair market value of the land was $400,000. The building was $125,000. And so on so far. Store began operation 2007. Place of service, store, blah blah blah. Anything to help you?
I guess we just right now enjoy the fair market value because it's for accounting purposes. And then I think the store and improvements and fixtures you would add to the building class.
Okay.
And the other machines, like the other acquisitions have their own costs, and so we add it into the class. So we presume that it's empty right now.
Okay. So we have so far we've done nothing. Okay. So right now we haven't come up with an issue yet that affects 2010, right? Remember, we've been asked what are the tax issues for 2010. So all that stuff, great, doesn't help us yet. Okay, so you just make notes yourself, whatever you think you need there, write yourself notes, but you haven't done anything for 2010 yet. When they say for book purposes, on a tax exam, or for a tax question, Jen, what do you would? Big X, so what? Literally, so what? When you see for book purposes, they do this for accounting, they do this, who gives a crap? Doesn't mean anything, ignore it. They're just kind of throwing curveballs at you. Right? So when they say the accounting for this stuff, depreciation wise is this, they're just throwing the curveball at you. They're just trying to say, oh, by the way, let's see who actually understands that accounting doesn't mean anything for taxes. For this stuff. Okay? And then for tax purposes, what does it say here? Due to limited profitability, you see the building for the rented property at the time of conversion was $145,000. For tax purposes, the land and buildings are acquired for custom tops at the previous tax value. It's an important sentence. What do they tell you there?
It's telling us that they revalue the building for accounting purposes.
Okay, so this sentence here. Okay, so all the stuff they told, there's 2 sentences so far that we're going to use. Okay, for tax purposes, the land and building are acquired by custom tops at the previous tax values. Okay, that's the most important sentence you're going to see so far in that whole 3 paragraphs. And then that ties back to what we just talked about a minute ago. The land and the building were the 250 to 150. Okay, so again, don't write it again in your solution, but just make note of yourself. All they've told you is they did a rollover. And in 18 months, you'll see that, what that means. So basically, that sentence, for tax purposes, land and buildings are acquired by custom tops of previous tax values. That means they did a Section 85 rollover. Don't care about that right now for you. But all that says to me is go back and that stuff when it says the house was acquired in 1999 for $400,000. Those are the numbers you need to use in the future. Not the fair market value numbers they gave you by 2007 fair market value. So that's all they're trying to do. They're breaking it up, they put it in different places because they actually want to understand. And that's how things happen when you get information in different places. You actually understand what tax law means. So they give you the original cost, they give you a bunch of fair market value stuff as a curveball. Because later on down the line, they tell you, for tax purposes, the land and building were acquired. They were rolled over at the same cost base. Okay? So basically, all that stuff about fair market value and what they're doing from accounting means zero to you, because all they do is they go at the very end, they say, for tax purposes, we did a rollover. Which means the land of 250, the building of 150, those are the numbers you need to use if we do anything with the land and building. And I suspect, guess what? We flip the page, there's going to be something about the land and building. Right? So when you're reading the question, you can see they're setting it up for you. You just have to know what's coming. Make notes to yourself. Don't start writing it in your solution guide, because guess what happens, Mark? You know what the heck's the person doing? Write all over the question paper. Keep the solution paper reasonably coherent. Okay? Let's go down here. Oh, what the heck? I hate doing this upside down. Sorry, guys. I'll be a very good dentist now. Okay? And then they tell us a bunch of stuff about store improvements for store fixtures, computer class, machine, UCC for the classes, December 39. So they give us a bunch of stuff on UCC. So again, don't know anything yet. Don't do anything yet, but they just kind of give us some UCC. So as soon as you see UCC stuff, what's that mean to you? We have UCC. Yeah. At some point in time, don't do it yet because you don't know the context of what's coming up. But you do know Part B says calculate net income for tax. And part of the calculation of net income for tax is CCA. So guess what? That all becomes relevant when we get to the CCA calculation. Everybody agree? So again, somebody saw me today, come to see me in my office. Do not go rushing into writing an answer. Figure out your solution and start working through it, as opposed to writing like crazy, because what will happen is you waste time and you go to the wrong places. So far, we've only written a couple things down. Okay? The one thing, there is an issue here that anybody pick up. So it tells you the classes are as follows: store improvements, class 1, store fixtures, class 8, computer, class 45, machine, class 8, UCC for classes, December 31st, 2009. So there's an issue there.
Does it tell you the UCC of the building?
Okay. Doesn't tell you the UCC of building as well. It's part of the class 1, right? Okay. It's built into the class 1. They had some additions and stuff like that along the way. There is something here amiss. Okay.
Is it because there's 2 class 8 items?
There are 2 class 8
And then they
items.
only give you 1 class 8.
Well, don't forget though, what they're saying is class 8 includes store fixtures and machine class 8. So you're supposed to put anything to class 8 should be bundled up together, right? That's the concept of pooling. The problem is, should the machinery be a class 8? No. It's a manufacturing thing. It's some sort of processing thing. Generally speaking, the machinery is in the wrong class. So remember the client said, I think my account stinks. Put it in the wrong class. You know. So an issue that I would propose that you want to put up here as item 4 is the CCA class for the what do they call it there? The machinery. Should be reviewed. Reviewed for a couple reasons. Number one is obviously you may not have been taking enough CCA. And just importantly, for a second reason is if you're selling it, you're going to see the second selling, there might be a chance to have a terminal loss much faster if they're in a separate class that's buried with a bunch of other stuff. Right? Because remember, you can only take a terminal loss when?
Pool is empty.
When there's nothing else in there. So if you throw an asset which you just sold at a gigantic loss and put it in with a $5 piece of, $500 piece of equipment, guess what happens? You still have that $500 piece of equipment. You still have to keep depreciating that one that you sold at a gigantic loss because there's something else in that pool. So to the degree that you're allowed to put it in pools, it's a good thing in that case, especially when you sell it at a big loss, right? So that's why I just say here, I think the way I would say it is exactly what I said. I think we need to revisit what pool it should be in, right? Okay, that is an issue that you come up with there. Okay, acquisition and dispositions. On February 23rd, 2010, salesperson convinced the owners to replace their embroidery machine with the latest version. The new, faster one can handle. Since the old machine is in great condition, not a date equipment agreed to take the trade-in. They lowered the price from $250 to $150. accumulated accounting depreciation. When you see accumulated accounting depreciation, what do? Who cares? Please, 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 as you go through your career, when you see accounting stuff and you're a tax person, you just ignore it. Add it back, throw it out, do whatever you want, but it doesn't come into consideration other than as an add back on your schedules. Okay? So when I tell you about accounting depreciation, great for you. That's a waste of space. Okay? So that last sentence means nothing. Okay, what about the rest of that sentence? Anybody do anything with it? Is there an issue there? Or no?
Well, it's a trading in equipment, right? So you have to add back that $100,000 into the actual cost.
Okay, good. Okay. So we have, so item number 5. So trade-in situation. Okay, so all we're going to just say there is we must add $100,000 to the cost of the new equipment to reflect true cost of that equipment. Okay? Agree? So basically, we need to say that the new equipment cost is $250. Is that it? I don't know what's the other side of that equation. You don't get that money for free, do you? You didn't pay $250, really.
You also have to dispose of it.
Right. The second part of that is you have proceeds of the old equipment of $100,000. Right? So basically, we have two transactions. They reported this $150,000 addition. It's really two. It's an addition of $250, a disposal of $100. Same net number. The issue is, especially when you're dealing with classes and disposals and stuff like that, you have to report them separately. Right? So we must add $100,000. Therefore, cost equals $250. And proceeds of old equipment equals $100,000. Okay? So you can see in the case on Thursday, same thing's going to happen. You're going to throw a bunch of stuff at you, and all you can do is go down and say, okay, that's an issue. Let's do the numbers. That's an issue. Do the numbers, and at the very end, you just add it all up and say, what does it all mean? Okay? That's what part B to this question says. All the stuff we're doing, there's issues, and we're just going to add them up and determine what we're going to do this stuff later. Okay? Everybody good? August 31st, the corporation entered an agreement to sell its land and building for $800,000 as part of the downtown redevelopment project that Randy is involved in. The house is to be demolished. The sale will occur. That's good grammar. On October 12th. An appraisal dated July 15th that year identifies land 700, building 100. Store improvements are written off for accounting purposes. Store improvements are written off for accounting purpose. What does that mean to you? Buckets. Okay, zeros and fill stuff. Okay, Janice, what do you got?
Because the fair market value of the building is less than UCC, so 100 is less than I think it was 150 at the top. Yeah, they need to do 1321.5.
Okay, good. 1321.1. Okay, so because, and that's the trick you always have to look at for this stuff. Land and building are being sold, okay? You have a concern. The concern is if the proceeds of the building are less than the UCC of the building, you have to do this reallocation. That's it. If the proceeds are $160,000, what do you have to do here? So Janice, it said the fair market value of the building was $160,000. What would you say? Nothing. There's no issue. It's only if the UCC is less than the proceeds. Or the proceeds is less than UCC, sorry. And therefore you have a terminal loss that you worry about. In this case, guess what? No issue. Okay? Or there is an issue because the proceeds are less than UCC. So now, item number, or whatever, what number we're at, 7, is proceeds. We're going to do exactly that. Because the proceeds are less than UCC, we have to do a reallocation of the proceeds between land and building. Okay? That's the issue. And now let's do the calculation. Might as well do it while we're here, right? Everybody agree? You can just identify the issue and go do it somewhere else. The problem is, why bother? Might as well keep it someplace where it makes sense. So a question like this. So let's go down. So item 6 is because And that's the key to this stuff, ladies and gentlemen, is looking for the cues. Land and building sold together. You need to look at that and say, okay, what's the other situation where land and building together, something happens? There's a bad one and a good one. Remember we talked about that? The bad is this stuff. What is the good? Remember the good? What was the good side of it? The government had given, the government take it away. What was the good part? Yeah.
Do the election to change between the official seats to make sure that you minimize your capital.
Okay, when can you do that?
You are-
Right, okay? When you have a replacement property situation and the land and building are being disposed of, remember the government allows you to kind of fool around the proceeds between the two to increase the deferral. Remember that? So again, this is where you make your money in life, is identifying issues and saying, what do I do about it? That's exactly what we're doing here. The last part is, okay, how does it all add up? Which we'll do. But the real money is, holy crap, that's an issue. And guess what? When you read your report cards and stuff like that, issue identification is where you get big marks. Because in real life, guess what happens? You're going along running your accounting practice and you miss stuff like this, you bring yourself a lot of problems and you make our profession look like morons. And they don't want that to happen. So what they do is they try to reward people with saying, look, they know what they're talking about. They understand this stuff. I don't want to say it too negatively, but a monkey can do the tax return. It's the person who actually understands that, oh, issue, and gives the number to somebody who's going to go through the tax return. This stuff, this issue identification is where you get the most marks, where you should get the marks, because that's where you usually get sued, or you make a lot of money, right? That's how you bill people a lot of money. When you show them, I saved you $1 million. Here's your bill for $50,000. They say, where do I sign? Right? That's how it works. That's what the accounting profession is all about, is making sure you cover your butt and you're also getting value. And that's what these issues are. Okay, so Janice saw that says, I have a land and building being sold, and the proceeds of the building are less than the UCC, I have an issue. And that's the reallocation thing. Okay? That's what you got to figure out. Okay? So because, and that's what you got to say, land and building being sold in the same year, and proceeds, P of D, on building less than UCC of building class, we need to do a reallocation of proceeds between land and, okay? So remember, and all I did is that because that preamble stuff matches up with exactly what the provisions of the Act said. What does 1321.1 say? This. If in a year you have land and building to be sold at the same time, and the proceeds of the disposition are less than, I'm not smart enough to make this up. This is what the rule is. The key for you is to say, oh yeah, look, these are the situations that I'm going to do. And as we talked about here with Kelvin, the other one is replacement property. If in a year you have a replacement property situation and land and building are being disposed of, and you want to increase your deferral, then you can do that optional election, that max or increased election, whatever we call it in class. Again, seeing it's a matter, you get a lot of marks for that. And a lot of times, you know what? You get more marks for that than doing the calculations themselves. I would. If I was doing a marking key, I would reward that way more, because guess what happens? Nobody ever sees this in real life, and that's when people have problems. So the people who see it should get rewarded. And once you know it's an issue, you can just flip it and say, okay, do the calculation, pretty straightforward. We're going to do the calculation right now. Okay, who wants to do the calculation? Janish, go ahead.
Oh,
Yeah, Janish, go ahead.
So the proceeds of the building would be the lesser of first one's fair market value of land and building, which is 800,000.
So P of D. Remember what they do, ladies and gentlemen. Remember what the reallocation does. Again, I was somebody in my office this morning. Try to understand what's going on. Don't just jump into doing the rules, because if you understand what's going on, and you can even understand how they're skewing the results, you don't need to memorize the stuff. It just kind of flows out. Okay? I'm not looking at a textbook now. I'm not making this up. It's just, for me, it's just, they set this up a certain way, and watch what's going to happen. Janish, so we're going to PD.
Cash, sorry.
Oh, Cash, why did I call it Janish? Janish is over there.
Wrong class time, that's why.
Janish, sorry.
You're much better looking. I could say that. He's a guest. He's a guest. We can beat up on the guests. Any other guests? Put up your hand. I'll pick on you. I'm bugging you. You're adorable. Okay, so remember, so it makes both blush. Okay, so remember the process is the government wants to say they're jigging this, rejigging this, or jerry-rigging this, whatever you want to call it, to make sure that the building gets as much proceeds as possible. And the land is the plug. Okay, everybody remember that? So you should, the calculation will be, figure out the building number, the land is the plug. Everybody agree? That's all we're going to do. Building, land is the difference. So guess what happens? Let's do the building and get the easy mark at the end, which is basically the land is the proceeds minus the building. Okay? Everybody agree? So let's see the calculation again, and you're going to see the way they contrived it to make this happen. Okay, building, proceeds of building is the lesser of?
It's the lesser of fair market value of land and building, which is 800,000.
Okay, so remember, take the two together. So we already know what the total proceeds are. That's a pretty easy number to figure out. Yep.
Minus the lesser of the fair market value of the land, which is 700, or the ACB of the land, which is 250.
Okay, so remember the first page. Remember I told you they did the rollover and stuff like that. So back here, this is where this information is coming in handy. Right here, the house was acquired for $400,000 in 1999. The land was valued at $250, right? And the building was $150. Okay, remember that? Okay, so that's all they're telling you there. The land was $250 cost, so that's what we're using here. So as we go up here, fair market value land building less the lesser of. Why is it the lesser of? You already know it should be a lesser of. Why? What are they trying to do? Total proceeds, and they're saying some amounts for the land. What's their objective here? Why is it a lesser of calculation? Right. They're going to try to lowball the land. That's why it's a lesser of. They want that number to be as low as possible, so I take a lesser of calculation. Right? And guess what happens when we go and do the building side? It's a greater of calculation. There's no genius to this, it just makes sense. So the lesser of the fair market value of the land and the ACB of the land is 250. So guess what happens? 250 is the number that we're going to put in here. Okay? So the lesser of those two numbers is 250 minus 800. So all they've said is, look what happens. You're getting 800 grand. The first calculation is we're going to lowball you on the land, and therefore the building's going to have a high number. But we don't want the building number to be too high. Let's be fair. What are they going to do? They're going to do a second calculation, which is the second part of the lesser of, which is?
The greater of the fair market value of the building, or the proceeds of the building, or the UCC.
And remember, greater of, they're trying to now drive up the building number. So guess what? They use a greater of calculation. Okay? This is all contrived to make sure you come up with a certain effect, which is to maximize the value of the building. That's it. So greater of, which is?
Which is the UCC of the building, or the fair market value of the building.
Hang on. Fair market value of building, which was 100.
It would be, I think, 0 because they're going to demolish it, right?
Yeah, I had that conversation with someone this morning. That's the issue is when you look at fair market value, you have to look at the greater of how people are going to use it. So when they did an appraisal, let me explain this. So in there, they talk about the building being demolished. And we had a question in class that talked about if you demolish the building, fair market value 0. The issue is we have an appraisal which said somebody else would pay 100 for the building. The way valuation rules work is you have to use the greater number, the highest amount that somebody's going to pay in a willing transaction. So in this case, it's 100. Okay? If they didn't give you appraisal and they just said I'm going to get rid of it, then I think you could argue that 0. But in this case, because they tell you we did an appraisal, and the way valuation rules work is, I mean, read the rules. You're going to see it as you get closer to you take all those exams. Fair market value is the greatest value that someone's going to pay in a willing transaction. Right? Yeah.
Here's your question. Will we be doing this calculation in part A or B?
Well, we already know it's an issue, so we might as well calculate it here. We're going to use the number in part B as well. Okay? So we're here anyway. We identified the issue. Let's calculate the effect of the issue. We already know they're going to make us reallocate. So you're going to wait and do the reallocation later?
Well, I just want to know that for like the final exam purpose, like if we were different parts, like if we put in the wrong section, but we
You're still with marks.
Okay.
But I suggest, the good thing, ladies and gentlemen, is when I do marking keys and stuff like that, I try to do it in sequential order, real life. So guess what? You identify the issue, don't park it, you might as well deal with it. So do the numbers, put it there, and you just pull that number into your solution later on part B. Right? I think that's the right way to do this. Otherwise, what do? You're gonna say it's an issue and leave it there, and wait for 40 minutes later when you may or may not remember that you had it. I think you're crazy. I think you're giving up marks, and I think you're potentially gonna miss something that, especially something like this, you're probably gonna get 7 or 8 marks that are pretty easy once you've identified the issue. Yeah.
But then for UCC issues and stuff like that, you said like to calculate CC and all that stuff, do that like later on.
Yeah.
At the end, right?
Yeah.
Don't do it right away.
Yeah, so, yeah.
You should do last.
Right, well, because we don't know all the stuff that goes into UCC yet, right? Just might as well go through the question, do all the calculations, like then go into the final UCCA calculation. I would always say UCC should be the second last calculation before you do your total reconciliation, because there's still stuff coming at you. You start doing your CCA schedules too early, what's going to happen? Something else is going to happen later on. You go, crap, I gotta redo that. I gotta redo that. Do all your issues, and then say, okay, let's take the issues that I know that affect the CCA schedule, put them on my CCA schedule. You can do the order whatever order you want, but I can tell you one thing: you're going to redo stuff over a few times, and especially you get into a 4-hour comp exam. When you get into a 4-hour comp exam and a UP, and you start getting into this stuff, you don't want to be doing things over and over and over. You want to do it once when it's an issue, bring it up, and if it's going to have a carry forward, put a little star to yourself. Say, okay, I might need that later for CCA calculation. And put CCA on the question page. And then when you're going through and doing the CCA, pick them off one by one. Easy to do. But if you start going like this, you're going to go crazy. And all of it's about allocation, time allocation, and just thinking about it. Does that make sense? So in this case, I would suggest, I mean, you don't have to do this now. You can do it later. The problem is, why not? We're here, we identified the issue, it's pretty easy to do. Get it out of the way. You know there's going to be marks. So it's the greater of, and you already know from part B that you have to calculate CCA later on anyway, so you're going to use this number somewhere else. So it's the greater of fair market value and the lesser of AA and BB, which is capital cost, and BB, which is UCC. So I think the capital cost was what, 150, and the UCC was 150. No, capital cost more than that.
Focus is the store.
Because we added some like, fixtures and stuff like that. They tell us what the capital cost was?
I think it was 150 and then the 30,000 for the store fixtures.
Yep, so 180. Okay, so this is the capital cost is 180, which again is 150, which we originally paid for the building, plus 30,000 for the fixtures. So you can see, ladies and gentlemen, how cases are all about making notes to yourself and trying to keep track of what things are and putting them in the right places. So the capital cost is 180, which is the building and the fixtures that we talked about. And then the UCC is 158, whatever that is, 158 at the top of the page right here. Bless you. Page. There's the 158,054. Okay? So the lesser of these two is 158. And the greater of 100 and 158 is 158. So the proceeds disposition for the building will be 158. Everybody agree? And you know what? If you're on an exam, ladies and gentlemen, and you don't have a lot of time, if you identify this as an issue, what's the answer? 99.99% of the time with this question. What's the answer for this question? We were to show whether they could try the things that can happen. It's UCC. 99.99% of the time, the answer is UCC. Guess what happens every time you do this? It's always, there's an exception, but it's almost always going to be. So you identify the issue, and if you don't have time to do this little greater or lesser of, or you don't remember it, just plug it in and say the proceeds are going to be deemed to be UCC. And therefore, for the building. And then you're going to get some marks for that. You're going to get some marks for the next part, which is, again, another easy calculation, which is, Matthew has your hand up. What are you going to do right after you determine the proceeds for the building? What are you going to do next? You're going to determine the land, right? So if you're in an exam and you don't have a lot of time, you or something like that, you can get 6 or 7 marks, which 99.99% of the population are not going to get, because A, they didn't see the issue, or B, they're going to try to spend a lot of time doing this stuff. You're going to get almost all the marks for saying, okay, it's an issue. Secondly, the UCC is going to be the proceeds. And third, the land is going to be the difference. and you get most of the marks. And guess what? The marking key gives little half marks for this stuff. The big marks are for identifying the issue and coming up with the right answers, which are the proceeds or the land. The proceeds for the land and the building are as follows. I can assure you, start looking at your marking key. That's how I would do it, instead of going crazy. Okay? So basically, therefore, deemed P of D of building equals 158,054, which equals the UCC. And therefore, as Samantha said, therefore, P of D of land equals, what's the P of D of the land? Katie.
It's the 8,000
Total minus 158,054 building, which equals how much? 641,946. Okay, everybody good? Okay, so again, if you got time and you want to work through it all, that's great, but guess what? You'll get most of the marks for saying you found the issue, UCC should have proceeded the building, and the land is the difference. You will get most of the marks because guess what? You have done all the thinking. You can get a training monkey to do the lesser or greater of stuff. That's not difficult. It really isn't. Right? Okay. Okay, are we done with that issue? We done with that issue?
So we calculate the capital gains.
Right. Well, we're here. Might as well do the gain on the land, right? Okay. We already know the proceeds of the land. We know the cost of the land. Do you not think we already know we have to calculate capital net income later on? Well, we're here. We might as well calculate the capital gain on the land. Everybody agree? Again, just flow through. You know the proceeds, you know the cost, do the gain. While you're there, and you're going to put it somewhere else. And if you don't, you run out of time. You've already got marks for determining the gain anyway. You just did put it in a schedule somewhere. You're not going to lose marks for that. Okay? So again, so much of this is saying, okay, well, you're there, get the easy marks, and show that you do the thinking. So who wants to do the gain on the land? Yep.
So P of D is 642.
So gain on land equals P of D, which equals
642.
641,946. Yep.
And less the cost of the land, which was 250.
Yep. Okay. So what's the difference there? Do you know the number? You're going to make me do this in my head, are you? 390.
946.
Okay, that would have been too hard to deduct, I guess, right? And then half inclusion rate?
195,
195.
973.
973. Okay? Everybody get it? So again, the issues are there. You just got to pick them up and do the work on them and move on to the next step, okay? So let's see what else we got. Anything else left? Any other issues?
Should we do the gain on the building as well?
Well, you already know there's no gain on the building. You sold it for proceeds
Oh, right,
of UCC.
yeah.
Right? Is there a gain on the building? You can't. You sold it for exactly equal to UCC. There's no gain or loss. There's no depreciation. There's no terminal loss. It's exactly contrived to make it go to zero. And we'll look at that. We'll see the CCA schedule in a minute. Okay. Demolished. Okay, a new building was acquired on October in a small strip mall. Land is being leased to blah, 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 blah. The land is being... Okay, and then they tell us for tax and accounting purposes, the lease is treated as an operating lease, so it's fine. Okay, for the land. Okay. On September 15th, the business ordered some fixtures. Blah, 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 blah. Carried out depreciation. New fixtures cost 20. Okay, so what does all that tell you? All that mumbo jumbo at the end of the question. Where are we here? Sorry. All this stuff here. Okay, this is going to help us determine the lease versus buy stuff, which is what the person asked us for. Remember, there was a third sort of required in this question, is help them determine whether or not to do lease versus buy. It's not in the required, strangely enough. I don't know why, but I think they just laced it in there. But it said the person came to you and said, should I lease or should I buy the building? Okay, so there's going to be that third piece of this puzzle. Okay, so we will do that at the end. Okay, So determine the tax issue. So there's no real tax issues there, right? It's a financing issue. So we're going to do that at the end. And then the last part is just some CCA stuff. Everybody agree? Okay. So now we've identified the issues. Okay, part B is, what's part B? Yeah, Andrew. So part B is calculate part B income. Should say division B, right? Right, and we're gonna have two columns, right? Lease, buy, right? Everybody agree? Because they have two options in front of them, and they told us there, compute the tentative division B income under each alternative. So you better have two columns. So we're gonna have column A, which is gonna be lease building by. Okay, so all we're going to do now is a reconciliation of accounting income to taxable income like normal. Would you agree? Okay, so how do we start this? Anybody haven't heard from today? Haven't heard from today? Yeah, Esther. Okay, so you're going to start these schedules. Ladies and gentlemen, if you try to leave this course without understanding how to do a reconciliation for accounting income to tax income, you should check your brain at the door because you need to know how to do this stuff. Every single tax return you see in your future, there's a Schedule 1. This is the very first thing you do, which starts with accounting income and goes to taxable income, net income for accounting, or net income for tax. Every single tax return has that. You cannot expect to leave a tax course without understanding that concept. So Esther, so what's that number?
It's 397,800.
So, did I put them in the right order? Let's see here. They've already given you. Net income is here. 397,800, 397,800. Everybody agree? That is the starting point. And all the reconciliation, somebody give me the 30 seconds. What is the reconciliation of accounting income to tax income? What are we doing? What is the concept? Because there's still people who, when they come see it, they say, I get lost doing this. I'm saying, what do we try to do that helps you from getting lost? What is the concept? What are we trying to do with the schedule? Yep.
We're trying to take out all the things that are deducted or added for accounting that's not for tax, and then afterwards we deduct or add things that are for tax.
Okay, yeah, that's right. Okay. So absolutely right in terms of what you're doing step by step. The concept is assume the accounting income is right, except for the following, right? So you think about $1 billion company, there's millions of transactions happening through a year. They're all correct. The only things that aren't correct are the things we're going to change. And that's what you're going to do. You're going to say certain things are deductible for accounting and not for tax and vice versa. That's all you're doing. So you don't tell me something that's the same for both. Because if you try to do the tax return for GE Capital, how many transactions do you think they do? Millions and millions. So you're going to show them all on the Schedule 1? You only care about the things which are different between the two. Right? And that's things that, we just talked about. They're deductible for one and not for the other, or includable income for one and not for the other. That's it. So you know what? If something's the same for both, it does not enter into the equation. It goes at the bottom to say, an omitted item. Everybody agree? So all we're saying is, accounting likes it this way, tax likes it this way. And then we'll see, the easiest ones are which ones? What are the few easiest ones that you're going to see?
Depreciation.
Okay, depreciation versus CCA. Right? Remember, depreciation out, CCA in. Right? In terms of on the schedule. Right? Donations is one, okay? So basically you can't deduct it for accounting, you can't deduct it for tax with somewhere else, not in division B. Okay? Yeah. Meals and entertainment. Guess what? Whenever you see meals and entertainment, you're gonna add back 50%, except for if you're a restaurant company, that kind of stuff. Sure, you got another?
Gain on exit.
That's the other big one I was going for. Gain or losses. For an accountant, determining gain and losses is very important to them, to you, whoever you're an accountant. For us tax people, don't care, throw it out. Literally means absolutely nothing to a tax person. Your gain or loss goes away. You can spend 3 months figuring out what the gain and loss is. The tax person walks in and says, do the garbage. Let's start again. Quite literally, that is the process. They might use some of the calculations of the account, like the cost calculation stuff, but the tax person doesn't care about the calculation. Okay? Those are the big ones, okay? The two biggies are depreciation and gain analysis. Okay? There's a lot of other things like meals, entertainment, and stuff like that. But those are the two biggies. Okay? So this one, what do? We're going to start with, Esther, what did you say, 3? Okay? Remember, go to the first page. Is there anything on the first page that are giving me no-brainers, right? Esther, is there anything there that you see on the front page of the income statement that you say, oh yeah, easy?
Depreciation.
Okay? So you've got depreciation. So as soon as you see depreciation on the front page, might be sometimes in the notes, you're going to add it back. Everybody agree? So it's going to be 55,375, and we're going to do 61,000. Anything else, Esther, on the front page?
Depreciation.
Appreciate.
Contributions.
Okay.
For 2,700. Entertainment cost, which is at 50%, so that's 600.
Right, 50% of the 600, right? So 600. Yep.
And then there's a gain on sale of assets. That you have to subtract. So 278,150.
150?
And that's all.
Okay. Yep, Jeremy.
Don't you have to add back the tax bill that we paid for the land?
Yeah, but don't forget, all we did was just take out the front page. Okay, step one is always take the easy marks. That page just got you 8 marks, probably something that 8 half marks, but you should get super marks for those things. But might as well take them. Check, 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 every check, right? Okay. So easy marks right off the bat. Then we're going to go back and say, okay, what did we do in any of our issues along the way? So I would submit the next thing you're going to do is we already knew that CCA has to come in, so I would just put a little thing here saying less CCA, okay? Because we know we have to do a calculation for CCA. Okay, so let's do the CCA stuff, and then let's just go through any other issues that came up that we have to add some numbers for. Okay, everybody agree? As a protocol? Because you might as well do CCA when you do it the front page. Because I normally do the front page, and then do the stuff you guarantee you know about, which is CCA. Okay, so let's do the CCA stuff. Okay, so who wants to help me understand CCA? Yeah, go ahead.
Well, give us the CCA over 3 classes.
Okay, so good. Starting point, ladies and gentlemen. Again, easy stuff. They already gave us starting UCCs for 3 different assets classes. Take them, right? So we're going to say, so opening balance, class 1, which is how much, 6%?
Yeah, no, 4%.
4%, sorry. Okay, your opening balance is 158,054. Okay?
And then we have class 8, which is 141,120. So
That's 20%, right? 141,120. Yep.
And then we have class 45, which is 45%.
It's got a mind of its own sometimes. What's the CCA rate on that one?
45%.
45? 45%? That's pretty convenient. Okay. Right? So now we need to just go back and scan down and see was there anything new, right? Okay, so we know what we started with for the year UCC. Now we have to look and say, of all the stuff we read through, remember I kept saying circle out as the CCA stuff? Well, let's go pull it down now. So let's just go through real quickly. Okay, so what do you see here on this front page? Anything to do with CCA here, here, here? Anything yet? Anything on the front page? I don't think so. I don't see anything here that helps us go with CCA here. Everybody agree? Now we're up to the top of the next page. We just started with the CCA pools. Now let's get into this stuff. Okay? So what do we do with respect to the acquisition, disposition, the trade-in stuff? What do we need to do there?
For equipment, you have to go deduct the old equipment.
Okay, so we're going to do adds, disposals. Right? So for the equipment, what are you going to do?
You purchase the equipment to 250,000.
Okay.
Just put that in the
Class 29. Okay, so that's, remember we talked about, we have to revisit the one. I think what we need to do is leave it in the class now, class 8 for now, the old one. But we already know the right one for the new one, which is class 29, which is how much? 50%. 50% what, straight line, right? So you're going to put 50% straight line just to remind yourself. And you're going to put opening balance was 0. How much is your addition? Remember we had that issue where we identified the cost of the new equipment is 250? This is where you're going to plunk it into your CCA schedule, right? Okay, and my submission is don't do any of this stuff down here yet. Okay, because that's all just math. Okay? Let's just keep plowing through on the additions and changes in the pools, and then we'll go down and do the math, because then all you do is get your calculator and go tick, 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 across. Okay? What else you got?
We have the disposition of the trade equipment, so that's
So we're going to take out here 100. Okay? Everybody agree? So that was part of the issue. We identified issue number 3, I think, or whatever it was basically that the cost of the new one was going to be 250. The proceeds of the new or the old one was 100,000. Okay? Anything else? Let's go down to the next paragraph. Somebody want to help me with the next paragraph? Anything with respect to CCA there? Corporation to agree to sell its land and building for 800,000 as part of the downtown development project, and who's involved in houses to be demolished, sale and incurred, blah blah blah. What do I want to do with this one? Remember we had Allison had an issue here, right?
Yeah, well, we reallocated the proceeds, so we just,
So what do we do now?
so we're just taking it out of the class, and we set it to the UCC anyways, and we just pretty much set it.
Remember we reallocated the proceeds so that it equaled UCC? All we're doing on the schedule is showing the minus out. And the good thing is that's going to go to 0. Pretty easy math after that. Anything else on that issue? Let's go back here. So we're just circling back to the issue that we identified here. So we went through, we said, okay, the proceeds were here, 158. I would submit that now's a good time to do something. We're here, we did the proceeds, oh shoot, what happened? Okay. So, right, so we just went back and checked out our proceeds thing. Oh yeah, I said, okay, yeah, the proceeds for the building was 158. We're here anyway, what do you want to do, Allison? What do you do with this stuff? We're on this issue, we see it, so we don't lose it. What do you want to do with this? Right. So I think what I would do is at the same time, just make sure you remember yourself, add taxable capital gain on land, right? We're on the issue, we remember it, let's go plunk it in there, which was how much? 195,973. 195,973. Okay? Obviously, land has no impact on our CCA schedule, so we're okay. So we're now done with this paragraph, with the land and building stuff, right? We reported the transactions, reported the sale of the land, reported the sale of the building, we're all good. Everybody agree? Anybody disagree? Yep, Candace. Yeah, that's the next paragraph, right? So let's get into that, Candace. I'll let you take that. So the new building is to be acquired on October 6th, blah, blah, blah. The owner of the land is blah, 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 blah. Okay, so what do you want to do with that, Candace?
The thing is, you either lease it or you buy it.
Right.
I guess if you buy it, then you would add the cost in.
There you go.
which is 225.
So remember, we have two options, right? Lease versus buy. So what we're going to do is we're going to have almost like a CCA schedule that has two pieces to it. One that's the same for everybody, and then this addition. So what we're going to do is we're just going to put a little. So what class is that, Candace? This is the lease option. So just put a little note saying this is the lease option, right? Lease option, and you put a little line because that's really going to be the only difference between the two on a CCA schedule. So Candace, what are you going to do with that? What class is that? Do you know? So up here, Candace. So they're going to buy a building for 225. So class one? Class one? So we're just going to do class one. But that's a different class, right? 6% now or something? Yeah, so we're going to, it's a different pool now, right? So it's going to be the 6%. Because it's a manufacturing one or something like that? No, it's not 10%. Yeah, non-residential. Yeah, right. Okay, so it's a non-residential building, right? So we have 0 opening balance, 225 addition, and then goose egg on disposals. Okay? So all we've done is said, okay, we know we're going to have to do 2 alternatives. Let's just break it up, and instead of doing 2 different CCA schedules, please don't ever tell me that you would do this schedule twice. Don't do that. Just break it up separately, a little piece that says, all right, you can add and subtract the CCA at the end from the one item that's separate. Okay? And we're all good? Everybody okay? And all we're going to do now is the easy part, right? You've done all the thinking. Now this is where the computer or the trained monkey comes in and just go, what do we do now? What's the next part? Somebody I haven't heard from today. What do you do now? So you've got all the pieces you need. Opening balance, additions, disposals. Do we have, I think we have one more disposal here somewhere, sorry. Oh, sorry, down the bottom here, last paragraph, we had some more stuff. Store fixture replaced, and the old ones will be taken to dump at local cost at a cost of $100. Local dump at a cost of $100. Okay, the original cost of fixtures was $15, who cares? New fixtures cost $20. Yep. Okay, so we're going to put the fixtures for $20? Now, how do you read that? The old one will be taken to the dump and it costs $100. Are we getting $100 or are we paying $100?
I think we're paying.
Yeah. Yeah, so it's a negative proceed, right? Local dump. The old ones will be taking the store fixtures. We're taking to the dump and it costs $100. Yeah, it's $100, right? So it's the cost of the proceeds. So it's a negative proceeds almost, right? Yeah, we paid $100. That's what it says. It's not very well written, to be honest with you. Okay, so what do we want to do that? So the old fixtures were where? The original cost of fixtures were 15. Old ones. Where do we get the 30 from? Hang on here. So what did we do here? Let's just make sure we got this right here. What did we pay 30,000? Oh, the store improvements were 30. Yeah, that's right. So the old fixtures were in class 8, right? So we're going to do. We need to add $20,000 for the new fixtures. Right? Everybody agree? $20,000 for the fixtures. And then we need to throw $100 in as an increased cost. Is that right?
Yeah.
That's kind of goofy. I don't like the way they did that, but okay. So the way that's written, you have a negative proceeds of $100. So we should put in, so from the $100,000 proceeds in the year, this should be plus 100. Okay? So the net proceeds for the year were $99,900. Okay? Everybody agree? I wouldn't word it that way. I think there's a better way to word that question. I think it's pretty stupid, but it is what it is. So what are we going to do now? So now we have all the inputs. What do we do now? What's the next line on the schedule? Yeah?
Calculate UCC versus CCA.
Okay, so now you're going to do UCC before CCA. Right? Jen, right? So we're just going to now do mathematical exercise. So this one's a pretty easy one. I can do that one 0. Janish?
Sorry, like half year rule for.
Yeah, that's what we're going to do, right? So we're going to add across, and then just do. I would just do a line at a time. It's pretty easy to do. Or you can do one in a row. What do you want to do, Jen? What do you want to do, Jenny? This one's pretty easy, right? We're done. Okay, Jenny, what do you want to do? You want to keep going across, or you want to go down? How do you do these? Pardon me?
I'll go across.
Okay, so go ahead.
Then 61,000.
So what's this number? What does this work out to be?
Oh, 61020.
61020.
Yeah.
Yeah.
And then 1117. Yeah.
Okay. Then what's the next line, Jenny?
The half year.
Right. So you're going to do less 1/2 net adjust. Right. So what you're going to do here is this one's pretty easy as 0, right, Jenny? What about this one? Class 8. What's the 1/2 net adjustments?
Well, there was an addition of 20,000, but I don't know what the hundreds.
Okay, this is where I want to make sure you understand. It's 1/2 net adjustments
Oh,
to
okay, so it's
positive.
nothing
Because the proceeds are more than the additions, what happens?
So there's,
Your net adjustment is 0, right? Everybody agree? Because your proceeds are less than your cost of additions, there is no net adjustment. Because it's only supposed to be half net additions. This is a half net deletions. The rule doesn't apply. Yeah.
Just have a question about the $100.
Yeah.
How's it possible we have a negative procedure? When you technically state you can't really, if you are allowed to have a negative procedure, then when everyone just, every time I want to dump something out, then I'll just pay someone to dump something out and I can get dump it up.
Yeah, you still pay $100. You want a deduction or $100? You want $100. Right? Remember, that's always the situation where people have the tax tail wagging the dog. You don't do things just to get a deduction. That's stupid. Because you still lost the money that you paid out to get the deduction. So in this case, you paid $100, you paid $100, might as well get something for it. Which I submit, I think, it reduces the net proceeds for the year of the pool. Okay? So in this case, there is no half net adjustment because there is no net half additions. That's what people, you know what? I guarantee you, people will get to the final, what they'll do is they'll take 20,000 times a half, and they'll subtract it. That is not what the rule is. The rule is the half net addition, which is 20 minus 100 plus 100. Remember how we did the number? Yeah, that's right. That is a negative number, therefore it's 0. Okay, so there's no half net additions. So I'm glad that question does that for us. Okay, this one, no half net additions. What about this one? Who was doing this? Who was doing the question here?
just divide
Good.
by 2, so it's 127.
Yeah.
And then the last one is 137.5.
Is it a half of that number?
137.
You do.
Did I do something wrong?
Wait, no, you said 2.
225 divided by 2?
Yeah, that's only 1.
Okay, good. I was going to say. So now you're going to say UCC for CCA, which is basically 0 still, 61,020, 1172, 125, 1112, 500. And you're going to go CCA, 0. And all you can do now, very simple math, this times the percentage. Everybody agree? Not rocket science? Yeah. Okay, so what is that numbers? 20% times that is 12, 204. Okay, 45% times 117.
527.
527.
62, 500. And 6750.
Oh no, that's 1 0 too many. Yeah, 1 0 too many. Right? So all you can do is you can do CCA. That number times the percentage, very straightforward. What do we do now? For completeness, we don't need it for this problem, but you're going to just do add back a half net addition again. Net adjustment, this line goes back, right? So this is 0, 0, 125, 1112, 500, and UCC, okay? Which is going to be whatever. Who cares? Because we don't need it for this question, right? If you were answering this question, you would stop. Okay, you wouldn't even do add the head because they're not asking for any UCC, right? They just ask for CCA, right? You can stop, but for completeness, you can go on to your schedule. So in this case, that's a minus 62,000. This number here should be 62,500. So the sum of 1, 1, and 1 is what? What's that number?
75,231.
75,231. And then summation 1 plus 2
81.
equals 81 what?
91.
91. Okay? So remember, the first 3 items are the case for both scenarios, lease or buy. So add them up and that's your CCA or just buying or leasing. The second one is you throw in the situation where we buy the building, just add that back. Add that up. Yeah.
Why isn't the Class 8 UCC by CCA 61220?
Hang on here. Which one? Sorry?
The Class 8, the UCC by CCA, shouldn't it be 61,220?
Did I add wrong? Okay, is that 61?
61,220?
Oh, okay.
I don't know, like, I think it's a negative, it's the negative, like,
Okay, that's fine.
I don't know if it's right though, I just think so.
Somebody do the math there real quick. Pardon me? 61,220? Okay, I didn't do the math, so I'm going to take your word for it. So 61,220 times 20%, does that still come up to be 12,204? 244? Guess it wouldn't be. Cash? I rely on you for the numbers?
I was relying on you for that number.
Okay. So what are these numbers, Katie?
So
Elaine, do you have them?
just the first two, right?
Okay, so no, add this, plus this, plus this. So the first three, 1, 2, 3, those three numbers?
3 is 12,
Pardon me?
First thing is 12, 7.
4 is 4, sorry. I know the 0 one, I can do that one.
75,
75,
271.
75, 271, and then what's the addition of 6750 on top of that?
82.
82, 021. Okay? So if you're doing an exam, this part after here, who cares, right? Doesn't help you do CCA. That you don't. They're not asking for ending UCC. Don't care. Keep going. Okay? But in this case, you could do it if you want for completeness. So now we just need to go back here. And so, Katie, what were those numbers again? 75, 75, 271, and 80, 82, 021. Yep, Elaine.
I'm sorry, so would it be okay to explain the net adjustments for the classic fixtures again? Or why do we not do a half yearly one for that?
Okay. So, ladies and gentlemen, this column here is the one that a lot of people mess up a lot because they think just because I make an addition of $20,000, right? The addition of $20,000, the half net rule does not apply on the addition only. It applies on the net adjustments, net additions. So net additions means I put in 100, and I take out 100. Do I have a net adjustment do I have a net addition that year? I put in 100, I take out 100. My net additions that year are 0. Therefore, the half net additions is 0. In this case, the disposals are actually more than the additions. It's a negative number, deemed to be 0. So there is no opposite concept, okay? So it's the net. You have to do the net additions, basically being the excess of new purchases over proceeds that you get in the year. If the proceeds exceed the cost, there is no net addition, okay? And therefore, there is no net adjustment. And you just plow through the calculation, okay? Is there any other adjustments? I don't think so. I think we're done, right? So if we go back here, let's just finish our schedule. Just make sure I got. Anybody else? I think that's it, isn't it?
We have, if you lease it instead of, oh wait, are we talking about the?
That's it. We're just on the, hang on here. Should be okay, I think, right? Yeah, that's it. So it should be done, right? So the numbers should be, somebody want to add those up, make sure they're the same as
Oh,
mine?
would we have lease costs, or is that included already?
Lease costs in there. They say
It's
that,
already
right? Yeah,
included.
they tell you that. Yep. So we'll do the lease versus buy on Thursday. Okay, so what are those numbers? Somebody want to add them? Yeah, it's not a perfect example because they're basically saying it's already included in accounting for, that the lease costs are already included in there. It's the CCA, the only difference. Somebody want to add that up? Katie, you got your calculator handy? Somebody? Okay, I'll give you the number. Hopefully it's the same as what you're coming up with. 297, 902. 299, 027. Okay? Yeah.
In the case of leasing the building, would it be incorrect to do the store fixtures in class 13 instead of class 8 as leasehold?
Store fixtures, the big class. Well, fixtures are generally something you can take with you, right? It's leasehold fixtures are something that are attached to the building. So generally fixtures are something like, you can take them with you if you want to. They would normally go in class 8. Leasehold improvements are generally things that you, like I just built a restaurant. That's like literally the walls. I built the walls. That's a leasehold improvement, pure sense. I can't take them with me.
Okay, so if instead of them with store fixtures, these days that's what?
They would say leasehold improvements, or whatever they call it, first page.
Yeah, store improvements.
Yeah, store improvements, like leasehold improvements. Yeah, that was classic. Yeah, so.
In reality, would the lease fit include a lower end income for accounting because of the fact that?
Yeah, I don't know why they came up with those numbers, it's pretty stupid, you have to stick to them. Please don't assess whether or not the person who writes the question is perfect or not. They're like, well, they can have their kids screaming at them when they wrote the question and they screwed up and say, the pre-tax income is the exact same number for both options. That makes no intuitive sense. Just go with the phone. Okay, you gotta have to worry about assessing whether or not the question wrote, the person who wrote the question is good job. And don't kill me until I can find out the Google question. Hopefully they're okay. 297,902 is.
Going to numbers.
I reversed them? Okay. Okay. So they're reversed? Hang on.
Yeah.
Is that right?
Yeah.
Okay, so they're reversed, ladies and gentlemen, sorry. So the building, the buy is lower because you got more CCA, right? So this should be 299. 299,027. Yeah, 299, and that should be 297,902. Okay? So, ladies and gentlemen, we're going to do Part B on Thursday. Okay? So try to do, that is your present value of tax shield, and that's a good thing to know about. And you're going to do future questions, and we'll do that problem. Only focus on the tax stuff on Thursday, okay? Don't worry about the other stuff. Okay?